All right, it's 1 minute before open. I'm looking to see the market tap the 200 moving average on the 5-minute time frame and kind of see what it does from there. I think the market is going to be super bullish today, though. Even though we are in a nice downtrend, we have earnings for Google, Visa, Pfizer, Stryker. I mean, all some really heavy hitters, and all of their numbers are up. But again, with internal structure, you know, things happen. Things happen in the smaller picture sometimes that don't seem to match what's happening in the bigger picture, but
order filled.
all right, we're gonna target, see if the stop gets hit. We're gonna target, we have London's low, Asia's low at 245075, 2450, yeah. And then we've got liquidity also that's down here at 2431. $24.31. Yeah, I think we can just basically shoot for, oops, wrong tool. Where's my, cool, that's my stop and my entry. $15, $25, $28, $15.36-ish. Alright, so we have old liquidity, and then we have another level that we would anticipate a bounce from down here, 23.95. That's all I really want or need, though. We could get a bounce here, but I think it's gonna go. I think we're gonna continue the push. We have the momentum because it's the open. Just try to be careful so it doesn't whip back up and knock us out of the trade here. And we just smashed into a couple liquidity levels, so this bounce is normal. I just don't know. I think it looks like we'll continue to push, though. I don't think we're stopping. We definitely have liquidity just right under here. We have a lot to reach for, so let's see how the market responds. Let's see if we just whip right through it or not. I think everything still looks really good for a push. Still looks good, still looks good. I'm just gonna give it some room. Let's give it more room. We'll lock in at about 700.
Order filled.
Alright, stopped out. That was a good push though. Alright, so basically we came short of the liquidity I was looking to see the market sweep. Um, 25. So we hit. I probably should have tightened up a little more. I mean, I think we had basically hit like a power of 4, so that bounce was probably inevitable. I think, however, we are going to push down. It just makes sense because there's so much liquidity that's been sitting there. It could go either way, but I think we're going to see it push down. So what are we looking at here? We're looking at okay, so we have we had this imbalance created on the way down. So it's possible the market reaches up to close that. I'm kind of like, I could see either happening. I could see this retracing and then moving back down. I could see it retracing and continuing to go. So let's just actually be patient here and wait and see, because I think the momentum is definitely in the short. We did run some good liquidity. Oh, we like ran it all except for those imbalances on the fair value gap. Holy shit. This might actually be a good opportunity for a long. I think it's risky, but let's see if we can get a pullback, and perhaps if it looks right to take it up. Because we ran London's low, we ran Asia's low, we ran New York's previous day low. The only thing that's left behind, there are imbalances. It looks like we've all but tapped one of them. But the market is... Yeah, let's just see if we can get down to this level this 2431 even. What is this line on my chart? Let's see if we can get down to here. It came just short of it. And then just below that, there is 242375. It just is going to come just short of that, or is it going to whip back down and hit it? These wicks right here, oh wow, they're so perfect too. Like the trend line that it creates, wow. I almost want to just like short right now. I want to do both. I don't know what I want to do. All right, let's wait to see if we can tap these areas here. It doesn't look like we're coming back for it though. I think it's coming back for it. Let's be patient. I know it doesn't look like it, but I think it, I don't know. I can see it happening and I don't want to get tripped up. And it's unfortunate that I didn't realize exactly where we were in terms of all the liquidity that we had run, because I definitely feel like that was a great opportunity for an entry. Once we got outside of the Bollinger Bands, that was a very safe entry, and it made sense to take a chance there. But I have to stop taking entries that don't match my strategy, that don't match my rules, because I keep getting fucked up by that. So Alright, so we wanna see the 100% retracement happen here. And I honestly, like, I don't know if, like, I don't know if I want to, I'm not sure right now if I want to short from there or we did this massive move down and we retraced all the way back up, rejected again around the 200 moving average and the 1, 3, and the 5. It's pretty congruent. I'm trying to, for the sake of people watching and for me being able to review and like study my trades, I'm trying to get better about explaining the strategies when and after I take them so that it makes sense. So basically the strategy that I took for the trade entry that I was just in, that's my continuation. Those are the rules for my continuation trend strategy. I have a name for that one too. It's called the ism, but I can't really, I don't know, I can't teach the ism to anyone because the rules are so layered and so complicated. I don't think it would do anybody any justice. Like, the Libra is super simple, very easy. I think at any level, I think you can, if you just like follow the rules to the trade strategy, I think anyone can trade that successfully. The power of 4, I think anyone could trade it successfully. I think you're going to do better with that one if you're at least like an intermediate trader, just because of the balls that it takes to buy on a candle that just smashes into a key level. And like, if you're taking a long, you're going to be buying on a red candle. And if you're taking a short, you're going to be shorting. You're going to be selling on a green candle. And I think that's just hard to do for a novice trader, you know. But I think intermediate and up, you know, it might be a little bit challenging, but I think you should be able to do that. I would say if I had to place myself in a category, I would say that I'm not like right on the mark of an intermediate trader. I think I'm beyond intermediate, but I'm definitely not like, I wouldn't put myself at like, you know, 20-year expert status, definitely not. But intermediate, I think, can do well with that. And I think at any level you can do well with the Libra. It's very easy to spot those entries, but the ism is too complicated. The ism is just a me thing. But the ism is what I use for continuation trend entries. All right, so we're still waiting. We're still waiting for this objective to be met, for this 100% retracement to happen. And if the market happens to move down back to the level or beyond that it moved up from most recently, those short-term swing lows right there, if we move down, I'm going to look to see these levels definitely get tapped. There's other levels that are below. The one that's closest would be an imbalance that was left behind in the higher time frame, 23.9550. But I don't. If the signals looked good and it didn't hit this level, I would be okay taking it if at least one of these got hit. But I don't see this one getting hit and this one not getting hit. It just doesn't seem like that would make sense in terms of market efficiency. It just seems like if we're gonna hit this one, we'd hit this one, but we'll see. We had a really strong reaction from this level. Like if we look at the 15-minute, the wick on this, we came down, we ran through London's liquidity, Asia's liquidity, this 78% imbalance, and this is we probably hit 100%. We have this one down here. I have too many. There's a lot of levels down here that eventually I could see getting hit, but I don't know. We'll just have to wait and see how this plays out. But yeah, this was like, what an amazing power of 4. I mean, it hit the area and it just went crazy. It's gorgeous. All right, we're waiting. So the good thing about all of my recent fuck ups is that they're kind of like there's patterns to what I'm doing. So that helps me to like identify like what's going on with like my own psychology, and to give myself like very, very specific objectives to like look out for, and to make sure that I'm following while I'm trading. So I've been able to deduce that I'm going back and forth between these two extremes: hesitation and impulsivity. And we could also think of that as like, I think a lot of traders probably do this, and probably at like different stages of their trading journey. But we could also think of this as like fear and greed, right? The hesitation is fear for whatever reason, fear of taking a loss, fear of taking the wrong trade, fear of whatever. And, when you're in the greedy state, you're more impulsive. Logic and reason can sometimes almost entirely get thrown out the window, because you don't want to miss out on a move. You don't want to miss out on a trade. So even when what you're seeing doesn't match the rules to your trade setup, you're getting in those trades anyway, because you believe the market's going to go somewhere, and it very well may, but the entry is massively important. So like along my trading, like I always have like these philosophies that I start kind of developing for myself. And one of the most important, things that I realized about trading a while back was that it's far more important not to lose money than it is to make money, because there's literally, I mean, there's dozens and really, if you think about all the instruments that you can trade, all of the price action that's happening, I mean, there's like thousands of opportunities in the market every single day. If we narrow it down to just Nasdaq and just my rules, my strategies, there are, would I say there's dozens of opportunities a day? In one singular day, I would say so. I would say there's probably at least a dozen opportunities. And if not, there's definitely even just in the New York AM session, there's definitely at least a half a dozen opportunities a day. And not just opportunities, but I'm saying like actual, where like my rules are actually met. I can safely get into the trades. It matches my rules, right? There's so many opportunities. So that's the reason why it's more important not to lose money than it is to make money. Because like, for example, like this right here, this was a power of 4. I missed it. But like it does, I don't like, I could have made the decision to get in the trade around here, because that's when I realized what the liquidity levels that had been hit and my key level was hit and where we were at in the market. So I could have made a fairly impulsive decision to get in right here, even though that entry doesn't match my rules. It's better, right? Because bad entries put you at risk. So it's better for me to miss that whole trade, even though I believe with strong conviction that the power of 4 performs extremely well. It doesn't matter. If the entry is wrong, the trade's wrong, right? So it's more important for me to let that trade go and to just wait for another opportunity, because there will be another opportunity. The only thing that's going to, stop me from being able to like be in the position of taking advantage of that opportunity is like, if I start doing a bunch of impulsive stuff and I strike out early in the day, so then when the next opportunity comes, I can't take it, right? Because I've either hit my personal daily loss limit, or even worse, right? If you get into this cycle, even just in one day of taking a bunch of terrible trades, and then you end up like blowing your account, it's not worth it. So it's just if you miss the entry, just let the trade go by. Another one will come. All right, we just ran that level. Good. Okay, hold on. I gotta assess here. We ran 1, 2, 3, 1. That happened super quick. Yeah, that's probably... Hold on. Yeah, I think that's just a missed entry right there. So I think I think that we're gonna see the market move down. but I know that the market is, I believe that we're going to be overall like bullish today. So yeah, there's definitely some hesitation on my part here. Damn, it gave the opportunity for an entry 2 times and I didn't take the second one.
Order filled. Order filled.
All right, I'm happy with that entry. That's how I want my entries to be. Like, even if I'm wrong, I want to get out break even. That is a big deal to me. have the liquidity, the range on the liquidity at the highs and the lows is fairly tight, so I just want to keep a close eye on that. And this is obviously very realistic. You definitely take a chance. Like when you enter your break, you put your break even stop in early, you're going to get knocked out of more trades. But you also, you have to be able to quickly make a judgment call on when you think an entry might be more high risk and when it makes sense to adjust your stop to break even early, and if and when you want to decide or let the trade ride a little bit before you adjust your stop. Because of the earnings, I'm really expecting the market to really move to the upside today. I'm going to take a lot of buy side liquidity. I do think we're going to drop first and then move up, but I'm just being a little bit cautious about that. And sometimes it's very annoying when you get knocked out of trades like multiple times, but I don't know that I can be upset with myself for protecting a trade when I'm like, taking a short in what I anticipate to end up being a bullish market. My job is just to be patient and to wait for my setups to play out. I'm also keeping track of where I'm at mentally, right? Because typically when I'm in the market for too long, the market starts to break me. So it's like I think I have the ability to trade very disciplined, very well for about maybe like 2 hours max, honestly. And then after that, I'm a risk to myself. The stochastic is not overbought in the 1 minute, and we have London's high, which has not been tapped, and a bearish key level just above this wick. But We did smash into Asia's high. We did already take that liquidity. We took that liquidity in London. But even after the liquidity is taken, these levels will still be reacted to throughout the day. Not every day, but even the liquidity levels that have already been taken, you'll see that they'll still act as key areas. So Asia's high is right here. London's high is right here. Bearish key level right here. So we came just short, actually, of hitting Asia's high. And I look for stuff like that because the market, like, has a very, very meticulous way of, like, setting traps. And, like, so when I see that, I'm like, well, like, it's probably coming back. Like, if you have a key level of some sort, or, like, let's call it a liquidity level, and the market like pushes to it and like misses it by like a tick or two, it's easy to justify for yourself and just be like, oh, like that's good enough, like take it. But I feel as though the market creates, like, engineers these traps, and sometimes they're just like, it's just off by just a hair. But I remember this book that I read this is like back when I was trading crypto. And, you know, basically she goes on to say, if you have a strategy and the market doesn't like do what you're looking for exactly, don't touch the trade. And then in my brain, I converted that message to, if that motherfucker breathes wrong, right, don't touch it, because it could be a trap. So that's how I always think of things like that. And so what I think is, I think the market, even though it created like this nice move down, I think it's going to come back up, and I think we're going to run London's high. I think we'll hit that bearish key level, and then I think that we'll move down. How far down? I don't know, because we already took a bunch of liquidity to the downside. So it could be a short-lived move down. We could run through and we could end up, you know, hitting this area, and then we could end up coming all the way down and, you know, taking this liquidity that's down here, whatever. But if it comes back up and runs London's high and hits this key level, I will definitely be looking to take a power of 4 entry. Another thing that I'm looking at is, I do see, like, in the 1 minute, I see us building like the support for longs is definitely, it's building and it's pretty consistent. But if I were going to take my continuation trend for like to the upside, I would need to see that trend look more organized in at least the 3-minute time frame. All right, it's 10:18 New York, and I know that in about 45 minutes I'm going to become a risk to myself. So I don't want to miss whatever the next trade opportunity is. Okay, now I very strongly believe that we are pushing up for that London high level and that key bearish level. Alright, we got 8 seconds left. We did not hit it yet. 30 seconds left on the 1 minute candle. There goes the key level. Thirteen seconds left on the 1 minute candle. I need to see it. 2 seconds. I need to see it get inside. There we go. There.
Order filled. Order filled.
That's a very early break even. Fuck. Like really, really early. Okay, let's hope the momentum is there.
Order filled. Order filled. Order filled.
Fuck. What's up here? 259050. 259050. Okay. Alright, we're gonna take another shot at this. We're way outside of the Bollinger Band. Let's not hesitate.
Order filled.
$200 risk.
Order filled. Order filled.
Okay, very nice.